The stock market continues to power higher. Take a look at the SPY. It had a brief pullback on the NFP or jobs data that came out 2 weeks ago, but has been quickly bought up. The question is, should we be still buying the index, or are there some individual stocks that may offer some better risk to reward profiles out there? Well, in today's video, I'm going to share a few stocks that I am watching and a couple stocks that I think are severely oversold and do not look anything like the S&P 500, which has been traveling higher. I'm going to talk about some stocks that I think are on sale today. If you're new to my channel, consider subscribing and hitting the thumbs up button. Let's jump into some stocks. Now, the first stock that I want to talk about is one that we spoke about a few weeks ago back on the channel, which is Accenture. Accenture is, of course, a marketplace for consultants and talent. They essentially help businesses with contractors and, almost like a freelancer agency, if you will. And it's a huge one at that. It's a massive company. They've been around for a very long time, and the stock is absolutely getting pummeled here recently. And one of the biggest criticisms that I see online for why the stock has dropped so much is, of course, the introduction of AI. Why pay for consultants when you have the opportunity to now essentially use a million different chatbot AIs to help you with anything you need help with? But just a few weeks ago, we saw a ton of this sort of mentality when it came to Google stock, which has recently bounced back. The idea that AI is going to take away all of the advantages that Google offers and their big business moneymaker, search results, but the stock has proceeded to completely rip to the upside. It's amazing how sentiment can very quickly cause a stock to drop really far, really fast. I mean, what you're looking at here in terms of Accenture is a drop of almost 40% in not even a year. I mean, this is like half a year. Stocks dropped like 40%. And this is, again, a very large company that does a ton of business. Let's take a look at some of the financials. And what you can see here when we have selected ACN or Accenture, that revenue growth has not come down dramatically or in any way. And that what we see is still a consistent overall slow and steady rise in revenue and a slow and steady rise in net income over time, with profit margins that hover somewhere around the 11 to 12% on a pretty consistent basis. In fact, they even recently beat their earnings per share estimates, which were 3.32. Analysts thought they were going to come in with $3.32 per share. They actually came in with $3.49. So it's a very profitable business that overall under the hood seems like a strong company. But this is the stock market, and the stock market loves to get very emotional, either bullish or bearish on a stock. In my opinion, I think Accenture is a little bit overdone to the downside, and I personally think that there's an opportunity to buy the stock. So this is my personal view. I think we, again, as always, not financial advice. I'm sharing my thoughts and opinions here for fun and entertainment reasons only on YouTube. But as the stock has continued to move lower, I've kept my eye on it. And with this continued push lower, I do think there's an opportunity to pick up the stock at a relatively cheap valuation. What do I mean by relative? Let me show you. What you're looking at is the price to earnings ratio over time for Accenture, which historically in the last 3 years averages around a 28 PE ratio. Currently, it's trading around 20.5, which is a much cheaper relative valuation than it usually receives in the markets. And that's what I typically do when I look at stocks. I like to look at the relative valuation of a stock and what it currently trades for. And so while a lot of people think that Accenture, has a terrible road ahead, and clearly the stock valuation has gone down quite a bit at an 18 to 19 forward PE and a 20.5 trailing 12-month PE, I think the stock may actually be relatively oversold. Relative to its own history, it's definitely trading cheaper than it usually does. And some people would argue for good reason, because, hey, AI is going to destroy their business model. I don't think that that is the case. I think AI will create many new projects and opportunities, at which point Accenture can still play a part in providing talent and expertise in certain areas. At the end of the day, even with all this AI stuff, there's still a need for intelligent engineers who know how to leverage and use AI. So to me, when it comes to Accenture, I think the stock is a buy on a longer term basis. I think it's oversold. We'll see if I'm right about it. I could be completely wrong. I'll be keeping an eye on this one and potentially adding some shares to my portfolio pretty soon. If I make any adjustments or buy the stock, I will share that inside of our Discord server, which is linked in the description down below. And again, it wasn't long ago when the exact same same kind of like, oh, AI is going to destroy Google mentality was taking place. I mean, that's been a threat to the stock for a couple years now, ever since we saw all this, 2023 buzz around the AI chatbots coming to life. People were kind of worried that Google's business model would be threatened. And I think there is a valid concern there, but there is still also the possibility that you see a massive build out of AI tools from Google. I mean, we're seeing that in real time. They're building out all sorts of different AI tools, and in many ways, they get some of the highest ratings on their product Gemini in terms of the AI tests that are being run out there. And similar to Accenture, Google is still trading on a relative to its previous 3-year history at a somewhat cheap basis. The forward PE being around 18.3. To me, looks pretty attractive even after the price run up recently. Today's video is sponsored by Moomoo. And if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings like Nancy Pelosi's directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in NVIDIA shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. Another stock we've been watching here recently is Apple, which exploded in the last few days, pulling back a little bit here today. I'd be interested to see if Apple can come down maybe into the 210s. I was actually looking to pick up the stock, but I was more interested in selling like a cash secured put down on the 190s, which I may look to do. If you get, a couple days down, I may get an opportunity to sell a cash secured put, collect some good premium, but currently doing nothing with the stock. But I do think Apple might be staging a start to a recovery here. And the retail crowd favorite Palantir is up and away here recently, cooling off just a little bit today. I think that there is very much the possibility that this stock has some very sharp declines. It's almost built into the valuation that you're going to get some very sharp volatile movements just based on how expensive the stock is priced at. I mean, you're talking about a PE ratio in the 780s. I mean, that's an astronomical number. Forward PE of 218. I mean, this stock to me is very hard especially by traditional valuation models to try and say that it's a buy. I mean, maybe there's something that the market is, maybe the retail investor is seeing something the rest of us do not. But for me, it's a wonderful company. It's a really cool technology, but I think it's valued very expensive. And, at the end of the day, stocks are not necessarily the company. You can really like a company without really liking a stock, and vice versa. You can really like a stock without necessarily really liking the company if you think the relative valuation looks good. It's all about how much is the business, how expensive relative to the financials is the business. By the way, the tool that I'm using is called the Stock Box. And if you're interested in trying it, we'll leave a link in the description down below to where you can sign up and get information about our 30-day trial that we offer on the tool. If that's something that you're interested in, if you want to explore company financials, technical screeners, for example, our 52-week high and low breakout stock scanners, our market breadth tools, which show you which areas of the market looks the strongest, or if you want to use our new institutional tracking tools, which allows traders to keep an eye on what institutions on a quarter-by-quarter basis have been buying or selling. Through the 13F filings, we just built and finished this tool and added it to the Stock Box. So if you don't have a copy of the Stock Box and want to try it out, all the information can be found in the description of this video. Another crowd favorite Another crowd favorite that's been on a run here is AMD, Advanced Micro Devices. Bit of a NVIDIA competitor, which is also running really hot here. Semiconductors are staging a massive recovery and still look really strong for now. Amazon continues to be one of my favorite picks currently. I do think that there's an opportunity to continue to add shares to my existing position, though I already own 260 shares. Here's a look at a stock that I own, which is Airbnb. I had sold some covered calls, collected the 100% full premium on it. I sold the 142 calls that expired August 8th. So I collected the full premium there, and now I'm still sitting in the stock, which is back to break even. This is a cool thing about selling options in general, is the stock has ultimately gone nowhere, but I've made some good profits just selling calls against my existing 218 shares. I collected about $1,000 in income for selling this covered call, and so I am looking for an opportunity if the stock swings back the other direction to sell calls again. Another travel stock that I'm watching is Delta Airlines. I've owned this one for a couple months now here, and also have been selling calls against my position. In this case, you can see I've sold the 5th of September calls for the $55 strike price, and I collected $1.16 for selling this call. Obviously, it is in the red at this time, but I do have a good size position and would not mind at all to get called away from my Delta position, essentially taking profits on the stock. And one that's not so fun for me to talk about is my continued journey with Robinhood. You can see that I sold the $95 calls. They're expiring this week, which brings me to, kind of the ultimate tough decision, which is I'm going to have to let my position go. I'm sitting in 186% gains on the stock. But the problem is I also sold calls at a $95 strike price. So all these gains past $95, which is, by the way, like 19% in gains, I am forfeiting, or I have forfeited all of those gains due to the call that I sold. So obviously the question becomes, then why the heck are you selling calls on a stock like this? But remember, hindsight is 20/20. It's very easy to look at this. It's very easy to look at this stock and take a look at the calls and say those look silly when they've not worked out. But a lot of times I've sold calls and collected nice income, like I did with Airbnb. I just closed out $1,000 on that one, and it's a nice way to generate some income. But sometimes you get caught in this situation where I didn't lose anything for selling these calls necessarily, because I do own the shares, at least at this time. But what's ultimately going to happen is that these calls will get exercised by the call buyer, requiring me to sell my 600 shares at $95, even though the stock is trading at $115. So not fun. These are the scenarios where when you sell calls, sometimes it doesn't work. And in this case, I sold calls and the stock went up a lot. And so I am sitting in a situation where ultimately I will still make a very nice profit on my Robinhood buy. I bought the shares, around $40.21. So I'm doing, overall, I'm doing really well in the stock. I shouldn't complain. But of course, giving back a sizable amount of my gains here due to the calls that I sold. I'm down $7,260 on these calls, and up about $45,000 on the stock itself. Here's a look at some of my other positions. I'm still in my PayPal and Fortinet, which Fortinet is actually bouncing back. Maybe we should talk about that. Fortinet was a stock that dropped big on me here recently and does look a bit oversold. However, I'm not really interested in adding more position size to my trade. I did think about it, but I looked at it. I already own 400 shares. So this is a good size position for my account. And so not fun that we had a huge drop in the share price, but I'm just going to continue to hold my position. This is a longer term buy for me. I do think, cybersecurity is going to be very huge in the future. It already is, but I do think that we are going to see a recovery in the stock price. It may not be right away. Maybe we do go lower in the meantime. And if we get low enough, I might have to step in and buy some more shares. But for now, I'm sitting in a drawdown on this stock, and one of my stocks that has not worked out for me this year for sure due to the big drop. Before that, it was just flat for the year really, but then dropped big on their earnings report, where they guided or their guidance was not super attractive to investors. So I'm still sitting in the stock. I think it has long-term potential, but in the meantime, just being patient. Stock I've done really well on is Meta. Of course, Meta is, everybody knows it, Instagram, Facebook, WhatsApp, etc. They own all sorts of software technologies and are a leader in AI because they essentially use AI for their algorithms behind Facebook and Instagram. And so the stock has done really phenomenal here. I am looking at this one and just kind of continuing to hold my shares. I don't have 100 shares, otherwise I probably would sell covered calls on the position. But for now, I'm just going to continue to hold this one. I mentioned NVIDIA NVIDIA earlier. Here's a look at the stock here. I'm up pretty nicely overall on NVIDIA, up 64% or so. I've also sold August 29th calls at $205 strike price. I collected $1.38. So to map out how much max profit that would be, I can take this $1.38 and multiply that by the number of shares, which is 5 contracts or 500 shares. The max profit I can make on selling these calls is $690. So what I'm essentially saying here by selling these calls is that if price is anywhere below this strike price so what I'm saying by essentially selling these calls for $1.38 per share is that if by expiration the stock price is anywhere below the $205 strike price, I get to just pocket the $690 and keep my shares. If you're interested in options, we actually just dropped a video on this channel on Saturday about how I trade options and keep things relatively straightforward for beginners. So if you're interested in learning more about options, we'll leave a link in the top right hand of your screen to check out the full video.